Hey, everybody. I usually count down to 60 seconds once people have been let in from the waiting room, and I think that's almost 60 seconds now. My name is David True, and those of you who have not attended the events before, those of you who have will know me well. Those who have not, that I'm one of the officers of NIPAY. We've been doing these events pretty much regularly since 2008, and the organization started in 2006. We're virtual these days. We hope to go back to in-person events soon. I'm very happy that you've joined. We try to put on interesting events, and I think we do a good job. And this one should be a fun one because it's a very, very apropos topic. First thing I want to do is thank very much Davis Wright Tremaine, who is our sponsor and really allows us to do what we do. So big huzzas and thanks to them. And then a few mechanics. First, if you have questions, please use the chat function. Second, in order to make sure the focus is all on the participants, the panelists, and the moderator, if you could please, once we start, turn off your cameras and turn off your microphones. Once we get into the chat room, then everything will open up again, and we can do that. But during the presentation or panel discussion part of the event, if you could please do that, it would be very good. So as I alluded to, we will have about 50 minutes of discussion, then questions for 10 or so minutes, and then we will go into breakout rooms afterwards, which is our way to sort of do a facsimile or provide a chance for each of you to meet each other and talk a little bit afterwards, sort of what we would normally do if we were meeting each other in person. And with that, I think I'll just get the event started, because why should I waste any more time with me talking? So I wanted to pass everything off to Reed Lutanen, or did I say that right? Yeah, I did say it right.
Yeah.
I'm always worried about saying that right. He's got many titles, but the one that's most apropos here is the Executive Director of the U.S. Faster Payments Council. And with that, I'll turn things over to Reed.
All right, thank you so much, David. Great to see some familiar faces on the video before he made everybody shut it off. But we've been talking about faster payments for a while now. So what's taking so long, and what may be holding us back? We've brought in some experts from different parts of the payments ecosystem to help shine a light on some of the real issues that are being addressed today that could hamper or even accelerate faster payments adoption in the future. So this session will dive into topics including the benefits for both the industry and consumers, how smaller FIs can keep up, the road to interoperability, and value-added services. Welcome to the session, The Truth About Faster Payments. As David said, I'm Reed Lutanen, Executive Director of the U.S. Faster Payments Council, the leading industry association focused on driving the United States to ubiquitous faster payments. I'm thrilled to be joined by three leaders in the payment space. And we're going to get into those things that I mentioned. But first, I want to give the panelists each a chance to introduce themselves and give us all a preview of where they're coming from. So let's just get to that, starting with you, Allison. If you would just start off by giving us an introduction of yourself and then provide some high-level thoughts on the perspective you and the Fed are bringing to this discussion.
Great. Thank you, Reed, and thanks, David and NIPAY for the opportunity to be on the panel today. I am Vice President of Industry Readiness for FedNow, and basically what that means is our team is collaborating very closely across the industry to enable the go-to-market of the Federal Reserve's new payment rails. And these are going to be the first new payment rails that we've brought to market in about 40 years. So very, very exciting time. We have been working really hard, again, in collaboration with many of you, to really help to educate the market, to define what we want to be building, what we need to build, how we're going to onboard customers. And of course, we've launched the pilot for FedNow. So really, all the input that's been provided has been, very, very important. And we're now really shifting to focus on connectivity, testing, and then eventually launch, which we'll get to. But before maybe I turn it over, I just wanted to mention, for those that don't know, a little history of why we're even bringing the service to the market, especially given there's a current service in market for faster payments. And really a lot of work was done to determine if this made sense to do. And the decision was made that from a policy perspective, we would be able to offer the ability to enable financial institutions of every size. So our goal is to reach ubiquity, and that could be jointly with other institutions and services in the market. That's the first thing. The second thing that we're very focused on, of course, is safety and efficiency in the payments. for 24/7, 365. And we really think by bringing the service to market, it's going to enable choice. So it's great that RTP is out there. We've been collaborating with TCH on the service and in our own design of the service, which we'll probably talk about a little bit later. But we really think this is good for the market because this offers an opportunity to promote resiliency and redundancy in the market. And then finally, I'll just say, we do have a history. We've played a longstanding role as a payments operator in the past. So we do have some experience there that we're borrowing from, and then we're also learning a lot from others in the market. So with that, Reed, I'll turn it back to you.
All right. Thanks, Allison. Jim, let's go to you next. If you would just give us a quick introduction of yourself and some thoughts on payments modernization and what people in the audience should have in mind as we get this conversation going.
Thanks, Reed. And thanks to New York Pay and you guys for having me today. I'm very happy to be on the panel. My name is Jim Colassano. I am the product executive for the RTP network at the Clearinghouse. And just to build on a couple of things that Allison said, the Clearinghouse is a bank-owned payments and settlement organization. We clear and settle about half the payments processed in the US. And we've been around with about the same charter as Allison mentioned for about 170 years now. And about 4 years ago, we were very proud to have stood up the first new payment rail in 40 years, which is the RTP network. It is a 24/7 network that clears and settles transactions in real time. It's been in continuous operation now for 4 years. We are starting to see some significant growth in the network now, which we're going to be talking about today. And just in terms of payments modernization, when we started on this journey 4 years ago, we basically started out looking at the payment itself. But there is a great deal of capability surrounding the payment that faster payments frameworks bring to the market. It is 24/7 and it's got instantaneous settlement and finality. But there are also other capabilities, non-financial messages that can be brought to the market, other types of capabilities that can be brought to bear that we're now starting to bring to market in 2022, and we'll be talking about a bit. But when we talk about the issue of modernization, it's not just speed that we're talking about. It really is all of the elements that are necessary to bring the payments business in line with the evolving business models that we are seeing take place in the market today. And if you read any of the market research that's out there right now, especially coming out of the pandemic, businesses and consumers have gotten a crash education on how to do things remotely, how to do things electronically, how to do things digitally, and how to do things fast. And all of the research now says that you may not be seeing the demand yet, but what we are definitely seeing is the expectation that payments will process in alignment with the way that the business models are evolving. So to be able to support a digital economy, to be able to support digital commerce. And what I'll be talking about a bit, Allison's going to be talking about what the Fed's planning to do. I'm going to be talking a bit about what we are planning to do in kind of this next generation of RTP and some of the capabilities around cross-border transactions and some of the other capabilities that we're going to bring to market in 2022. Back to you, Rick.
Great. Thanks, Jim. And Elspeth, people who signed up for this session were expecting to see Sergio, and you're not Sergio.
I am not Sergio. He's much younger and better looking than I am. However, Sergio's wife went into labor earlier today, and so he could not be with us this evening. So he asked me to tap in for him. Sergio and I work very closely together. He is the product line manager for the RTP network and for the FedNow network for JJ PayCenter, and I'm a senior product manager in the JJ PayCenter organization, which is the payments hub that Jack Henry has, supporting access to new faster payment networks. So he asked me to tag in for this, and I'm happy to do that. I would tell you that Jack Henry kind of approaches the faster payment conversation or the instant payment conversation a little differently, because we are trying to board institutions now and get ready to board institutions on FedNow as soon as it becomes available, with applications and use cases that are going to benefit community and regional financial institutions and their customers. So we've found ourselves kind of at the forefront of education in terms of what the value is for these instant payment networks. We've had to make sure that people understood the difference between the networks and where that value would come from. And we've had to understand where everyone is in terms of building applications, and then work on developing the kinds of relationships that are going to help everyone get to ubiquity, because there's going to be the right applications there for users to leverage when they want to make these payments. So I think of it as we're right there. We've built the integration into RTP. We're working very closely with the Fed to make sure we have those ISO 20022 messages down and that all of that works. But our institutions expect us to do that. They're asking for that next step, which is to get them buttons to mash to send transactions. So that's where we're coming from.
Great. Yeah, and that actually is a good segue into where I wanted to start this conversation off. And I want to stay with you, Elspeth, because as a processor for more than 100 FIs that are live on RTP, I'm sure you guys are seeing what's happening in terms of use cases in the marketplace. So what are some of those use cases that are out there and that might be of interest?
Well, the largest use cases on the network that we're seeing today, and all of our institutions with a couple of exceptions, are in a receive-only posture. So we're seeing a lot of wallet transfers from Square and PayPal and Venmo into the transaction account. So at the end of the day, a lot of funds are out sitting in wallets. I think I've seen stats about, the billions of dollars that Starbucks has on Starbucks cards. And consumers are actually quite interested, and small businesses, in moving those funds into their transaction accounts so that they have the ability to leverage them. And they will pay those wallets to move those funds instantly. We see account-to-account transfer or me-to-me transfer from some of the large owner banks of the RTP network, PNC and Chase, where they are actually allowing you to send yourself funds at a third-party institution. I think the most surprising thing for everyone was how quickly payroll and gig payments have come up as a use case. That's one of our fastest growing use cases in the market. And I think, based on the folks that I've had the opportunity to talk with, is going to grow precipitously because of the value it brings. Some of the folks like Daily Pay and Pay.com and Paychecks are really leveraging a new way to look at compensation, which says once you've worked the hours, you really are due the funds, and that waiting for 2 weeks or 4 weeks is arbitrary. And so businesses should reevaluate the way they're looking at making those funds available, whether it's through earned wage access, work today, get paid today, a lot of those things. And I think that that's going to be an exceptional benefit to employees. They've sold me, maybe I have stars in my eyes. But I think that we're going to continue to see more of it in the market, and that's going to become a differentiator and a reason people might move institutions if they don't have the ability to provide that instant availability for pay.
Yeah, for sure. I've actually heard anecdotally that there are businesses where in the break room they've got lists of financial institutions that are enabled for RTP or for real-time payouts for wages. And in fact, there's a fast food place near my house here that, of all the things that they could be messaging on the very front window of this restaurant, the thing that they've decided is the most important thing for them to put out there is that they pay their employees at the end of every shift in real time. So yeah, it's becoming a competitive advantage, I think, for some businesses. And I think very quickly it'll become expected for hourly workers to be paid that way. And so I think the corporates are going to be demanding to be able to do it to keep up with their competitors. Jim, let's get you back in this, because obviously this all currently revolves to a large extent around the RTP network, and it's all very real. So a couple things. First, obviously anything you'd like to add to what Elspeth was just talking about regarding use cases in the market. And then also, what type of functionality is coming that might enable additional use cases?
Thanks, Reed. I would just build on what Elspeth said. What we are seeing in terms of the explosion on the payroll side is probably the one area that surprised us the most. We thought payroll was kind of done in terms of direct deposit payroll, that everything was working very, very well. But again, the experience of the last couple of years has dropped everything on its head, has turned everything on its head. And now individuals are expecting to get paid when they want to get paid. They want to dictate the payroll cycle. And we're seeing the payroll providers accommodate that by going to different models where they can offer the employees different methods of getting paid when they want to get paid. But there's another side of that payroll equation that we're also seeing, and we expect to see some come to the market this year, and that's on the funding side. Because not only do you have to be able to pay it out faster, but many of these companies need to get that funding quicker. And one of the capabilities that is coming into market this year is what we call our request for payment message, which literally has the ability to deal with the collection and the revenue side for most companies, which hasn't been addressed much in the past several years. And this could accelerate the cycle of payroll from beginning to end, from a multi-day process where a payroll company has to actually get the funding from that company, make sure it's cleared and settled before they can actually pay out the payroll to the employees. If you want to have more rapid payout, you have to make sure there's certainty on the funds receipt side. So you're seeing a lot of work on that credit side in order to get the money in, get it in with certainty so that you can start to address the issue of how you pay employees faster. One of the other areas that I will tell you, talking back to kind of the business model and the evolving business models, one of the ones that was just recently in the press is driveway.com. When you talk about kind of evolving payment models. For driveway.com, you can actually sell your car. Driveway.com sends somebody there to pick it up and is actually making the payment using real-time payments. So before the car actually leaves the driveway, the seller actually has the money in their account. And that, again, is enabled because you have the ability to move immediate funds at the point of transaction, right? And many of these models where you have an exchange, a real-time exchange going back and forth, you need that settlement finality, which is another piece of capability that these real-time networks provide. So it's not only the speed, but it's the fact that these funds settle with finality and you get notification back that says that the money has been received and the transaction has been cleared. Some of the areas or some of the things that we're going to be bringing to the fore to add more use cases, first of all, is going to be the increase in our dollar amount. So we had been operating, we started the network at about $25,000 as the dollar limit. We raised that last year to $100,000. And April of this year, we increased that to $1 million. And we did that in response to businesses coming back and saying they want real-time payments, but the $100,000 limit we had was a limiter in terms of how much they could move over. So we do feel, and we're already starting to see business to business and supply chain activities that are starting to expand because of the increased dollar amount. And we're looking at this from a very controlled standpoint. So we are constantly looking at how we might be able to increase that. We'll look at the impact and the implications, and we will continue to look to increase the dollar amount. I mentioned to you the fact that we're going to be introducing RFP into the market this year. And the first place that consumers are going to start seeing that is in the bill pay space. So the bills that you typically get right now in paper form or via email, you will now be able to get an RFP through your bank's billing platform. And you will be able to pay that RFP immediately, exactly when it's due. And what that does is it gives the consumer or the retail customer the ability to control their cash flow and the precise timing of when a payment's made and get confirmation back that it's been received by the biller. And that's extremely important for consumers who we're hearing from research really want to be able to control their own cash flow, and businesses that want to control their cash flow. We are also, at the end of this year, going to be piloting a cross-border instant payment service that we expect is going to unlock quite a bit of additional use cases. We're going to be doing this with EBA clearing, so the European Union. We've done a successful proof of pilot last year, and we will be moving that into market at the end of this year. And we are building out overlay services that leverage these messages for something like bill pay. So looking at additional ways that we can solve very specific pain points for billers, for invoicers, and suppliers and buyers to create a uniform experience and a predictable experience end to end for the customers. So just some additional things that you can expect to see from us this year that are enabling more use cases. The biggest demand we expect is really going to be in the business-to-business space this year. The volume is going to come from consumer applications, but we expect a real explosion of use cases as we start to see more business-to-business activity.
So that's all, Jim?
That's it.
That's it? Allison, obviously FedNow isn't in production yet, but I know you guys have been working on all this for a long time. So what are you hearing out in the industry? What are some of the needs that we should be focused on to help get more use cases up and build momentum and so forth?
So let me get the number one question answered and out of the way first, which is, when are we really going to launch? And the answer is in 2023. And if you ask when in 2023, it's in 2023. So more to come on that. But that's really exciting. And we actually are, and recently just announced the fact that our pilot, which includes 120 institutions, banks, credit unions, and processors, many of them are starting to move towards initial testing. So we've started some early connectivity. We expect and hope that those numbers to increase throughout this year to prepare us for launch in 2023. So that's the good news. From a use case perspective, look, what James and Elsbeth mentioned, I mean, very, very consistent with what we're hearing in the market as well, relative to the use cases. Tremendous excitement around RFP, which we will have enabled when we launch. And lots of discussions about, how you enable that from a business model perspective. The technology is really the easy part. There's a lot of players in the value chain there. So lots of discussion around that. I think the comment made around limits is an interesting one in terms of transaction limits. We've made a decision that we are going to cap the limits at 500,000 when we start, and actually the service will be preset at 100,000 initially, and you can actually move up or down from there. Of course, we will, continue to monitor the market and determine when the time is right, if it makes sense to up those amounts. But certainly agree with the demand and the interest around the B2B space and that need for really watching the limits. But we think from a fraud perspective, just launching a network, that's the right way to go initially. The other thing that I'll just mention, really a lot of the banks and credit unions we're talking to, I mean, they're looking to launch the service to stay relevant. They're starting to realize, or they're waking up a little bit more to the fact that they're going to need it to either keep their existing customers or attract new customers, and also looking to, define, new products that they can bring to market. So that's a little bit about, what we're seeing in terms of how we're going to drive the momentum. As Elsbeth mentioned earlier, I mean, there's just still a tremendous amount of education that's required in the market, especially as you move to the long tail, if you will. And so, what we continue to emphasize is just the importance for, banks that are dependent on their processors and other service providers to reach out and start planning. We are encouraging everyone to think about not just how you're going to connect, but what practically do you want to do? What use cases, what value is that going to deliver? And then, how are you going to support that in this new 24/7 environment? And of course, we're seeing a faster uptake with those banks that have experience with existing faster payment services. They're picking things up, more a little bit more quickly, and we're doubling down on those that are newer to the party and trying to get them up to speed as well. So lots of effort there around just education, information, even down to the point of making sure that players are thinking about everyone in their value chain. So we don't have, you can't just go sign on to FedNow as a consumer. I mean, the banks need to actually do the work or work with other digital providers to enable that service. We're just, we're the pipes. And so a lot of discussion there, even initially from the market, about are we actually going to be having a user interface? Which I think is interesting. So that's a little bit about what we've heard over the last couple of years, but certainly more work to do.
Yeah, definitely a lot more work to be done. I wanted to kind of change gears a little bit and talk a little bit about, we've heard a few references throughout the beginning of this conversation about fintechs and the role of fintechs and banks seeing, payments as a thing that they need to do to stay relevant. So I wanted to get to you, Elspeth. What about those fintechs? It would seem to me that they'd be all over faster and instant payments as a way to make what they're offering, their products, work the way most people think they should. Is that right? Or is there, what's going on there?
I talk to fintechs almost every day. And they are very interested in supporting this. And there are a lot of very smart people in nimble little companies who are trying to build new networks that take advantage of these new rails. They've got interesting ideas. They're really trying to push the envelope. They're trying to make things simpler. They're trying to take advantage of the data. They're trying to solve problems that exist in the market. They are aware of problems and they are looking to leverage the ISO 20022 messages to solve those problems. And we expect to see multiple fintechs who are integrating with Jack Henry through our API. It's a simplified API that allows you to send transactions into our payments hub. And then we handle the ISO 20022 messaging in order to provide solutions for our financial institutions. Some of the problems with fintechs is really timing. These are often in early stages of startup. And so they're very anxious, but the process is moving a little more slowly. They like to be able to code something in a minute and a half, and that's just not going to happen in a world of bankers where you have compliance and you have, and you're trying to develop a network at the same time. So I think we'll start to see those things start to come to market. I think some of them will succeed beyond their wildest dreams, and some of them will fail, and that's to be expected. But I think that as those start to come to market and the industry see what's on offer, it's really going to spark a lot of thought about how to approach both consumers and businesses. I know that there's brick and mortar pay from your online banking that is being looked at, ERP integrations, specific solutions for escrow and title companies, implementations that might allow you to drive away with a car because you've been paid for it at the lot. There's just a lot of those kinds of things that are not yet here, but very close.
Yeah, for sure. And a couple of things that occurred to me while you were talking there. One, it does seem like, and it feels like a lot of what fintechs are trying to do when it comes to like these digital wallets is they're trying to make it easy and simple for people. But to Allison's point, a lot of what's going on there is they're trying to provide people with a way to work around a banking infrastructure that hasn't quite caught up with what people want to be able to do transactionally, right? But in a way, they have their own issues, right? And I saw a tweet the other day, and I'm just going to read it because it's funny enough. It says, I hired a college student to tutor my son in Spanish. We were figuring out which app to pair with, and she told me in this excited voice about a new way her mom showed her to pay people. It's really easy, she said. It was a check, you guys. She wanted me to write her a check. So, still opportunities, I think, to your point, Allison, for financial institutions to regain that space and actually offer, I think, a better, more seamless experience than what people get from these apps today, as illustrated by that tweet. So really quickly, before I go to you, Allison, though, I wanted to clean up a little bit of jargon for our audience, just to make sure everybody's on the same page. One is RFP, which I heard both Allison and Jim use. That stands for request for payment. So just really quickly, historically, a lot of payment systems have offered both credit push payments and debit pull style payments. These new RTP and FedNow are planned to be credit push only. And so a request for payment is a way for a would-be recipient of a payment to say, hey, I'd like to be paid this amount. And then in the way these work is it's up to then the sender of the payment to say, yep, I want to pay that amount to that person who's requesting it. So I guess you guys can clean up anything there if you want to when I get back to you, if you don't like how I described that. And then the other thing is ISO 20022, which I'm not going to get into a lot of detail explaining, but it's essentially a modern message set for payments that is structured in a way that allows for both people and machines to be able to read the messages, parse out the different data elements, and can help with things like auto reconciliation of payments, and also for including additional data elements in a payment that maybe isn't available through a more traditional ISO 8583 message. Cool. So Allison, I know the Fed's been going through a lot of effort to help understand the various angles that people and entities are coming from, and thus how fintechs might fit into that puzzle. So what are you guys learning? How are fintechs thinking about this, and what's next for them?
So I think the comment, the discussion made earlier about, the fintechs do really want to move fast, and some of the larger, more established ones, it's been interesting to talk to them. They're eager and excited to work with us, but sometimes we decide it's better to just kind of hit pause until we build up the infrastructure, and then they know exactly how long roughly it's going to take them, to connect and get going. So the speed on one hand can be really, really fast for the more established fintechs, and for those that maybe are a little bit earlier stage, we're finding that they're excited, but in many cases there's a lot they need to learn about payments even. So there's education there as well. But I would say overall the banking as a service providers, a lot of excitement around that space and other disruptors in terms of new providers that are coming in and looking to capitalize on the instant payment rails. So that's really exciting. And we talked a little bit also about, customer experience. And that really is, number one priority for many of these fintechs. And so, we're just spending a lot of time not necessarily figuring out how the payment and the message and the technology is going to flow and work, but how is it going to do it in a seamless manner that actually is going to drive value and adoption. So to us, that's really where a lot of the focus is being. And of course, back to this discussion around requests for payment. I mean, there's so many different ways to build out the business model and the payment flows there. So lots of messaging opportunities available there as well. So lots of discussion today, and I think that will continue in the future about how we're actually going to drive that uptake and adoption around RFP. So those are just a couple observations. The last thing I'll say, just from a Federal Reserve perspective, is the Fed's been really open and has embraced the fintech community and the service provider community. And we did launch earlier this year a service provider showcase. And it's been really interesting to watch the excitement around that, because I think we have close to 100 providers in the showcase now that are essentially, displaying, offering up the capabilities that they plan to offer on FedNow. And so we do have banks and credit unions coming to us saying, I need partners. I'm realizing I can't do this on my own. Where do I go? Who do I partner with? And so that's often one space that, that we point them to. So I think, I certainly was happy to see that and that collaboration and look forward to that continuing to grow.
Great. Yeah. And I guess that gives me an opportunity as well to plug the Faster Payments Council has a solution provider catalog as well. So another good resource, very similar. The one thing I'd mention is in terms of folks who are interested in maybe providers who are not just FedNow specific, but are providing other network services, you can check it out. We don't quite have 100 yet, but we'll catch you guys eventually, Allison. fasterpaymentscouncil.org. Jim, what do you see as some of the advantages and disadvantages for fintechs to get involved here? Potentially taking on that role as a single point of integration for FIs to connect to multiple networks, maybe. What might be some of the things that they're thinking about, some considerations that might, give them pause or cause them to think twice about getting in here?
Well, let me start with the positives, right? As Elspeth and Allison mentioned, there is an incredible amount of enthusiasm in the fintech community in terms of this space and the capabilities it can provide, right? The ability to really create extraordinary customer experiences using faster payments is a problem that's that's bothered the industry for years. So this does provide them with a lot of tools in the toolkit for them to be able to work with. Some of the issues, and quite frankly, many of them right now, we have companies like Jack Henry who actually provide services to connect banks to the clearinghouse, to the RTP switch. We also have fintech companies who are creating send-side services so that customers can originate transactions coming into the network. And they work in concert with the banks and some of the other tech companies to create these services. And those are necessary because, quite frankly, it's easy to receive a transaction. It becomes a bit more challenging when you have to originate a transaction into the network. And some of the challenges that they have to deal with is the interchange or the exchange of messages. So it's not just a single direction. You send the message into the network, but you have to receive the response, right? So they've got to be able to deal with that bidirectional messaging, which is something they don't have to deal with in the current environment. Additionally, they have to deal with the other information that comes with the payment, which typically you've never had to deal with. In historic and batch-oriented payment systems, not a lot of additional detail comes with the payment. All you have to deal with is really the posting of the financial transaction. And unfortunately, In a lot of instances, any other information that flowed with the payment would drop on the floor. In this environment that we're in right now, the additional information that customers need to post a transaction actually goes with the financial transaction. So you've got to start to create user experiences that integrate both those financial components that they're used to and non-financial components that they're not used to. So, one way to look at it is many companies, even newer ones and up and coming ones, have to realize that that the Faster Payment Network, RTP, and what FedNow is going to be bringing to market are different than a straight payment for a wire or for an ACH today. So it does require a great deal of education, and the work that the FPC is doing and the work that FedNow is doing to educate the community, we do a lot ourselves, is absolutely critical so that these folks understand the difference between using a faster payments network and just using a regular traditional payment network. It is different, and we spend a great deal of time educating the community. Also, for the RTP network, you need a bank. Fintechs can't connect directly to the switch. They need to come through a bank. So the other thing that we need to work with them on is understanding bank speak in terms of the way you interact with the bank and the kind and the way and the things that a bank needs to take into consideration when they're dealing with a fintech firm. So we do quite a bit of education, some kind of basic, and then some very specific to the way the network operates and the messaging operates. And I just wanted to, on your description of RFP and ISO before was right on. The thing I would just add for the ISO messaging is that ISO message is a global standard that is used not only in the US, but is used in other instant payment networks around the globe. And it was built that way intentionally, and we used it that way intentionally, so that when we started to look at going beyond the boundaries of the US for domestic payments, that we would have very few technical limitations for interoperability between the networks. We've actually taken a similar approach in terms of sharing information back and forth with FedNow to make sure that while we may not be interoperable and we may not have a plan to be there for a while, we wanted to make sure that we had as few impediments in place as possible. And the ISO standard that we're using and staying strictly to it provides a lot of those benefits. And we're already seeing that in some of the work that we're doing.
Right on. Let me stay with you, Jim, because one of the things you touched on there was bank speak, right? So how the banks are thinking about this stuff. And I wanted to kind of dig in specifically on maybe smaller financial institutions, because I think to a large extent, those are the folks that that we're working hard to try to get educated on the FI side. Looking at this from the community bank or maybe small credit union perspective, what are some things that they ought to have in their minds? Is interoperability of networks something that they should be thinking about or concerned about?
I'll give you a perspective from the RTP network, right? And I think Allison is probably looking at it the same way, at least initially. We're focused on expanding the reach and getting to as many banks as possible through companies like Jack Henry, so that we get as many banks on the network and get as much reach as we possibly can. We have right now reach from about 62, 63% of the country, and we're working hard to make sure that we have as many banks in the country on our network, and we're heads down doing something like that. And we're doing that by making it easy for banks to connect to the network through their core providers, right? So we're pre-integrating with core providers so that any bank that is using their DDA platform can very quickly connect. And that process now is very efficient. And community banks can connect, and credit unions can connect a lot more readily than they could a year ago. So we're trying to make that as easy as possible. On the interoperability front, the issue we're going to have to deal with is creating synchronized instant settlement is very, very hard. It's not an easy thing to do. In the ACH environment today, the Fed and TCH exchange files at the end of the day. So that's how we achieve interoperability. Because every transaction on our network and the FedNow network and other networks will process individually and settle and clear in seconds. The latency that's created in going from one network to the other creates a real challenge. We are looking at some models right now and how we might be able to achieve interoperability. But one of the things we're trying to do in preparation for that is keeping our specifications as aligned as possible, so that even if a bank has to, or provider has to connect to both networks, we're trying to minimize the amount of custom work that would need to be done for one network or the other. And over the long term, we are going to try and work with any other operators, FedNow and anybody else who's interested in interoperability, but I don't want to minimize the challenge of doing that, right? You do have to give up something when you start to take additional hops with every single transaction. So that's where some of the problems are. With respect to why a community bank should do it, I don't know if it was Elspeth or Allison that mentioned a few minutes ago, when there is an expectation set in the marketplace, and that's where we are right now. People expect payments to operate efficiently, fast, and final. When you're not providing that capability to your customers, you're not going to retain them. So part of the issue that when we talk to banks, it's waiting is not really an option. We encourage them to get in the game because your customers are expecting it. They may not be demanding it, but they are expecting it. And what's going to happen is they're going to talk with their feet. You mentioned the fact that that's what employers are saying. If your bank doesn't offer you this capability, here are other banks that do. And we have seen a lot of instances where individuals and businesses have moved banks because they are looking for that capability and they can't get it from their current financial institution. So that's where, when we talk to community banks, that's what we encourage them to do. It is now. It is not the future. And you got to get in the game.
Yep, for sure. Elspeth, we hear all the time, a payment is a payment is a payment. It was a bit of a continued refrain at our conference in March, the FPC conference. Is it that simple, or is there more to it that smaller FIs ought to be thinking about?
Well, we have the historical businesses or products that the financial institutions have been operating have sort of been in silos. And it made sense when they started doing it. They had a bill pay thing, they had an account to account transfer thing, they had an interbank settlement thing, they have a P2P thing, but consumers don't understand why. And frankly, I was at an organization once many, many years ago, and there was a problem and I was trying to understand it. And this email came to me and it was like, oh, here's the answer to your question. You asked me about a person, but this is a payment to an individual, right? And honestly, that was because it was siloed, that the way that it had been set up in the system had certain business rules based on the identification of someone as an individual versus as a person. And no consumer would think that way, right? But it developed that way because we had these siloed products. So think about what it looks like if you break down these silos and you just have the ability to move funds from one place to another, and that the things that happen in the background related to risk and all those other things you have to take care of are not the problem of the sender. They're built into the system so that when they want to or need to get money to someone, they can just do it. And that's really what I think a payment is a payment is all about. And I think that the opportunity exists as we rethink payments, as we're trying to change our mindset from batch-based to instant, to do that same thing, which is to consider moving money from one place to another as just a payment that has that, and that all the other stuff that comes with it, we can sort of de-burden the sender and the receiver on, and build that into the process so that those things take place. That it's a perfect opportunity to make those changes.
Yeah, I definitely agree. And I think you hit on something, because a payment requires both a sender and a receiver. And Allison, when we're thinking about this, I keep hearing from folks, as soon as we turned on receive, we started seeing transactions come in, and that's all great, right? Because that's a bit of a passive implementation though, right? So, because what about send? So, banks, what do they need to have in mind there? Because it's not just about turning on the connectivity. They need to have user interfaces to actually cause the transactions to go, right?
That's right. So it's not just making sure that the institutions are partnering up with their providers to enable those front-end user interfaces or building their own. But it's also just about understanding all that needs to go into the send functionality and preparing from a technology perspective to enable that. So, I mean, what we're doing is we're encouraging everyone to dive deep into technical specifications and the ISO messaging and even the rules, the operating procedures, et cetera, so that you can be ready for send. So that's one thing that we're recommending. I mean, the other thing is, and we haven't talked about fraud the whole night here. I can't believe it. It's my understanding it's a little safer, a little less risky just to sit there and receive, right? And that's often a good starting point. And we are seeing certainly institutions in the market that are planning to do that, but we are seeing many that are also excited about doing send and receive day one. So there's a lot of discussion around, if you're going to do that, what kind of fraud controls can you put in place in order to manage your risk there. Rather it's the value limits we talked about earlier, negative lists, things of that nature. But, overall, I would just say, given where we are in the market, there are some advantages maybe that FedNow is a second mover to the market because, many of these institutions have learned a lot already, and they're a little bit more comfortable with instant payments. And so, we're coming to market very, very soon, and we're offering, again, flexibility. We do send receive, you can do receive only, request for payment, we have liquidity management, transfer capabilities as well, but there's that flexibility there. And again, given where we are in the market, I think that's apropos, but I'm not going to promise you that everyone's going to come on, send and receive day one as much as we would like. So just some thoughts there.
Yeah, for sure. And I think we're running out of time, and we've got time for some questions though before we break the session apart into the breakout. So we have had a number of questions come in. Jim, you mentioned cross-border payments. Who controls / sets the FX rate?
It's hard to answer that question without going through the model, but it would be set by the banks who are going to be in the program.
By the banks.
Mm-hmm.
All right. And I think this is probably, I'd say either Jim or Allison. Somebody's asking, is there an accessible test and play environment that fintechs or big techs can play in to develop their ideas, or do they need to come through the development team?
Yeah, so go ahead, Jim.
No, please.
I was just going to say that at this stage, we don't have an open test environment for fintechs at this stage. But what we are doing is encouraging the fintechs and other service providers, to work with their banking partners and others in the value chain to connect and figure out the best way to test out those end-to-end transactions as we move into the testing environments that we set up for our pilot participants. So that's a really good place to start. Hopefully in the future, we're certainly exploring other opportunities to provide sandboxes and things like that, but not at this stage, nothing set in stone. Jim, did you want to cover what you all have going on?
Actually, you laid it out very well, Allison. We have a bank test environment today for our bank participants. We do not have a specific test environment for technology companies to work in. However, we are in the process of building and standing up a sandbox for exactly that purpose. But as of right now, it's not in place as of today.
And at Jack Henry, while we leverage both of those test environments, and we do have a partner integration environment that does end to end. So where it's connected to a test core and it's connected to the test versions of these environments for testing purposes today on RTP, and will be available on FedNow when that's a little further along in the testing process.
Great. And Allison, you mentioned fraud earlier, and this is a question that's sort of at least fraud adjacent. The question is, do you see or expect problems with the finality of faster payments, given that customers are accustomed to the ability to charge back disputed transactions easily with credit cards? I'll just leave whoever wants to take that.
Well, I think, I mean, this is really just kind of a question of market. I mean, we condition the market in a way, right, to accept the chargebacks the way the system is set up. So, you know, I don't have a crystal ball, but I will say that we're getting lots of questions around this from multiple players in the value chain in terms of finality. So I think it's going to be another area where, you know, education is required. I think you have a visitor coming in, Reed. But Jim, I don't know if you or Elsbeth wants to touch upon the question that was just posed about that.
Yeah, I would tell you, just in terms of what we've seen, because banks do report, they've got a reporting obligation for any fraud that is seen on the network. I can tell you that the rates that we've seen are incredibly low. We don't know that that's indicative of what we will see as we really start to build out use cases on the network. But it's less than a quarter of a basis point right now in terms of what we see. So that's pretty low and below anything that we're aware of in any of the networks around the globe. But I will tell you that the one thing that we are encouraging, I think everybody is encouraging, not just for the RTP network, but fraudsters are getting much more sophisticated in their ability to scam people out of money and get them to move money to them. And the whole issue of educating your customers around the fact that an RTP payment, the FedNow payment, the Zelle payment, whatever, should be looked at the same way as cash. Once you hit that button, are you sure you want to send it? Are you sure you know who the beneficiary is? Because you can't get it back. And a lot of the user experiences that we see the banks building nowadays is creating some degree of friction just to make sure before the sender hits send that they have a moment to stop and say, do I really want to send this money? And oops, if I now was just told I can't get it back if I sent it, you know, that will be enough to start to address some of those scams, because that's where we actually see the real increase. But it is that front end user experience, because we do need to retrain and re-educate people that this is not a credit card. So that is really something that as we expand use cases, we're also going to be expanding that education process. And we expect that we'll be working with the FPC and with the Fed. I've had some conversations with some of your colleagues already about how we can, you know, in a concerted effort, address that.
All right. A couple more questions coming in. Lots of interest here. How about this one is interesting. Are faster payments going to evolve as the norm or as a premium service? And if both, what kinds of entities will it be the norm, and who will have to pay premiums to access?
Well, I don't think anybody can answer that question yet. I think we're way too early on. I mean, when Check 21 came out, these many years ago, the iPhone hadn't even been released. It was 3 more years before the iPhone was released. So no one could have anticipated that we'd be taking pictures of paper checks to deposit them in banks, right? I think we're at the same place in the market. Whatever makes the most sense economically and from a risk perspective, people are going to build ROIs and they're going to make decisions about how to send transactions. And the profile of an instant payment with finality alleviates a lot of uncertainty. So that's going to be a big driver, but people may be willing to pay, for a less, a more risky service in terms of the risk of returns based on the economics. So I think we'll see over time.
Yeah, I'm going to go ahead and sort of violate the rules of moderating and give my 2 cents here, because I think, and I guess I'm going to play a little bit with the semantics of what these words mean, but from my perspective, I think use of instant payments is going to become incredibly commonplace and normal for lots of different use cases, both existing use cases, but also I think use cases that are made really possible by the existence of this new sort of foundational piece of the payments ecosystem, in much the same way that the internet made various business models possible 20, 30 years ago. I really believe that. So I think, is it going to usurp and replace every payment system out there? I think we can probably safely say no, right? I mean, payment systems generally don't just go away, but I think it's going to, it's going to grow in ways that we can't even really sort of imagine right now. Is my take. Jim, you're nodding your head.
I would agree.
Certified checks. That's my goal, is replacing certified check. I think we could start small.
There you go.
First one to get rid of.
I agree with you, Reed. It's going to break the model of the way we traditionally looked at payments. And I think that the pricing strategies are going to reflect the value of the different solutions that banks develop or that providers develop. So I think that issue of a faster payment and RTP payment is the same across all use cases is not going to be the case. I think you're going to look at solution-based pricing. I think the pricing models that are going to come to market are going to be a little bit different, because you can do some things with faster payments and real-time payments that you can't with traditional payments. So I think the mold is going to be broken. And I don't know how that's going to happen. But what we saw in the UK when they put faster payments in, it is now the norm. It is the way people make payments nowadays. Because they saw the potential, they used it, and 10, 15 years in, it is the way people make payments nowadays. So I could easily see that happening.
Allison, anything to add there? We got other questions too.
No, nothing on that point.
Great. Let's see. This is an interesting one, and it touches on something that we were threatened with before the session started, which is interest rates. It says RTP has been growing in a time of very low interest rates. As interest rates rise, now we're not asking anybody on the panel to make any statements about whether or not interest rates will rise, but assuming that they do, for the sake of argument, do you anticipate resistance from businesses who don't want to pay their vendor faster?
Oh, no, opposites, because they're going to be able to pay the day they want to pay, right? So I think that's what you see, is they're going to pay on the very due date, not a day before.
Yeah, this is we call it real-time payments, and for full disclosure, I hate the name because it does connote that you're paying faster than you normally would, and that's not the case. What it means is that you can pay exactly when you want to pay, and that's the case, by the way, not just for businesses who had that domain all the time, but for consumers and for small businesses. So the ability for them to precisely manage their cash flow is going to be increasingly important as interest rates rise. So I agree with Elvis completely. I think we're going to see a march toward real-time payments for that very same reason, because it allows for more effective management of your cash flow positions.
Maybe just building on that, it also enables the ability to actually parse your payments out. So it's not just you
Yep.
pay exactly when you want to pay, but you might pay a portion now and then a portion later upon delivery, et cetera, et cetera. And that's all, it's worked up into the integrated into the messaging and often the rules that are set. So I think that's going to help as well from a cash flow perspective.
Well, another question, what about directories? Is there a need to have a directory service, especially in the context of requests for payment? What's the current thinking from your various organizations on directories?
Well, we're currently looking at the different models for routing. The RTP system, I think the Fed system also, is based on routing transit number and account numbers. All right, which is not the most efficient way, it's probably the one bit of information that people don't remember. With all the various numbers and whatnot that they have, it's not the one that they use. So having some type of directory which would help with the routing of transactions would help. Some of the banks do have Zelle, and we have done some work with EWS to clear and settle transactions that are routed through the Zelle network using the Zelle directory. But that's not everyone. So we are kind of talking about what types of models will be needed to supplement the routing of these transactions, but we haven't made that decision yet. Where I think it might be more relevant is as we start to expand business to business RFPs, that it might be because there are a lot of consumer directories today. We really don't have a good business directory that would allow us to route transactions. So that's where I think we might see some action in the near term, but it's still an area where we have not made a determination.
Just building on that from a FedNow perspective, we also are trying to define our strategy and explore the best path forward from a directory perspective. I mean, clearly having, alias-based payments beyond, many people don't even understand, what a routing number is. So, we're certainly seeing the importance and the value this would bring to the market. And also, exploring even how we might be able to collaborate with existing and market P2P players for settlement, when we come to market. But in terms of a directory, that's in the future. So more to come there.
All right, we're being asked to wrap up so we can get into the breakout sessions. There are a few more questions, but I guess to the extent you guys didn't get your question answered, stick around and maybe you'll get a chance to ask Jim or Allison or Elspeth in one of these breakout sessions. So great discussion, guys. I thought lots of good information there. Thank you so much.
Thank you.
Thank you.
Thank you.
So this has been a wonderful discussion. I want to thank everyone who's talked so far. The breakout session will start in a moment and will be broken into a smaller group. And the effort will be that one of the panelists or the moderator will be in each group. So you can continue to ask questions that weren't answered in the larger session. And I'll turn it over to the folks to the folks moderating this or running this session to send us into breakout. So I'll speak to you guys at the end. And enjoy the robust discussion. Continue that robust discussion as we go into breakouts.
Okay, stand by and you will be placed into a breakout room.